very, very important economic data coming out of Canada today. The real GDP number for the quarter came in at 0, and the expectations by the market were to come in at 1.6%. Now, here you can see a chart of that data. The light blue bars are the quarterly Canadian GDP, and as you can see for the most recent month, there's no light blue bar there. That's because it came in at 0. So just in case you don't know, the GDP is a measure of the total economic output of a country. So that change in GDP number coming in at 0 means the economy is starting to stagnate, at least here in Canada. And you can tell this isn't just a one-off piece of data because the trend has been down for the past few quarters. So this GDP number coming in so low has huge implications for Canada. Firstly, it puts the Bank of Canada's last meeting into a little more perspective. In the Bank of Canada's last meeting, they decided to raise 0.25%, and then they said they were probably done with rate hikes for now. So this really puts it into perspective. The reason why they're doing that is because they saw signs that the economy was slowing down and we're starting to go into recession. And now with this GDP number coming in so weak, it confirms that. This could put the Bank of Canada in a very, very awkward position. Say we have a situation where inflation numbers continue to come in hot, but we're also getting these low GDP numbers, then what are they going to do? If they continue to raise rates to fight the inflation, then it's going to kill the economy even more. So they could very easily end up being in a situation where they have to choose between fighting inflation and saving the economy. And based on things like the amount of debt the government has and how overvalued and inflated the Canadian housing market is, they're probably going to err on the side of letting inflation run hot and saving the economy, because the pain of raising those interest rates to fight the inflation, if they had to raise it higher, would just be too much pain to bear. So what does this mean for Canadians and investors? Well, if we do get into a situation where inflation data keeps coming in hot and the Bank of Canada doesn't continue to raise interest rates and keep up with the American government, that would result in the devaluation of the Canadian currency with respect to the US dollars and other major currencies. And the only thing you can really do to protect yourself against that is diversify out of Canadian dollars.